Hello everyone. All right, let's dive into the live stream here. I got to share this link out in a few places. I'm going to cover some Bitcoin ideas. All right. That's the link shared out. I've been looking at some different scenarios here on Bitcoin. You know, for the last little while, we've just been grinding up, ranging with bullish order flow into impulses, and what's made the most sense is to long these consolidations, take profits, wait for a retracement, long, take profits, and got some very nice longs along the way here. Anyways, so longing, taking profits in sweeps of the all-time highs, looking for longs again. I got in here on this one. Now, I got pretty cautious. We can recap some of this local price action, but I'm going to go over some high time frame ideas. I'm going to pull some stuff up on the chart and maybe some bearish ideas. There's no reason to get obviously super bearish here as we're just at all-time highs, and the play has been primarily longs, which I'm in. We'll talk about some of those. I got pretty cautious when we had this high volume wick through these highs after consolidating here. And I did put on a hedge short, with the target being this impulse low. Now, of course, we didn't come right into the impulse low, but I trimmed it, and I took a scalp long on Bitcoin in here, hoping or looking for a retracement to add back to it. But I also, I'm just going to review how I traded this. I took a short here, and the main idea was being wary of a bigger move to the downside, but with this point of control being flipping that to cut short and look for longs. I always say this, that whether I'm short or I take profits on longs, I'm always confident that I can get back into great high risk reward positions. So ultimately I took the long on the retest. So lose 1R, and this setup was quite tight. Traded as a reclaim into this idea. But anyways, just targeting the range highs. We started grinding up here. I took profits initially and just added back as on a lower high. So I wasn't too long. So I've taken profits, but I'm going to explain why I'm hedged short from these local highs. I have longs running, and if we break out, I'd like to just carry what I have. I'm even maybe interested in taking longs today. Down here, everything looks bullish on a higher time frame context. Even within the context of this, things look bullish. But let's talk about some of the bearish ideas here. We're in a range, so locally we're at resistance. I mean, it's not major resistance. We're kind of breaking up into all-time highs. I have a head short from here, stop above here. If we break out, I'm going to cut it and look to carry my longs higher. But let's take a look at some order flow here. I pull it up on this other screen. All right, so locally, this is all bullish, right? Ranging here. This is why I added back to longs, just ranging on bullish absorption. Come retest the level. Again, aggressive selling getting absorbed. This, a little bit of local bearish absorption here. Nothing major. But maybe a nice local idea to just take a short with tight invalidation for the hedge. If we look at BlackRock ETF, again, in this whole uptrend, just aggressive selling getting absorbed. But yesterday we had some pretty aggressive buying coming in at the highs. And I have found that this seems quite relevant on these low time frames when BlackRock has some aggressive buying, market buying into resistance has resulted in some pretty nice retracements. And so I'm just a little wary here, having closed BlackRock's ETF yesterday with some very aggressive buying into these highs. And I figure, why not put on the short and hedge out until we break out? So that's what I did. And I'm going to go back to the trading view chart, and we're going to look at some high time frame ideas for deeper retracements. All right. Let me turn off some of this. So we can go down to the 1 hour. So price has just been grinding up with big liquidation wicks, stopping everybody out that's breakout longing, targeting higher. If you're trading this and taking profits, tons of opportunities, both short and long. And we can see we're kind of condensing here. This could be bullish, this could be bearish. Bullish if we impulse for another leg up. Bearish if we start breaking down. I'm going to remove this. But we're kind of consolidating under this ascending trend line, right? Nice clean touches, more or less. We have some pretty high volume areas below us, around 72,300. It's kind of a region. It's near the point of control of this old range. We've put in some new price action, so this little region on the volume profile is local support. We have a big point of control down at this wick. We have a high volume area down at this wick. We have almost a point of control down into these lows where we consolidated. I'm starting to look at this, and basically price is just, again, these were opportunities. Definitely opportunities for longs. And every wick has just been bought back up instantly. But how much liquidity do we think is resting under all of these wicks? And it's really hard to time a top. And I think if you're looking for shorts, you really have to be playing local ideas and probably even be willing to take profits on them locally. But this could start to look pretty favorable to come and wipe out some of this liquidity. This being a major target, these lows being a major target, just come wipe out all these higher low, higher low, higher low, higher low. At some point, people are going to start putting on a lot of risk, not running their liquidations in this region, just assuming this uptrend is going to hold, and probably putting on a lot of risk on wicks. Wouldn't be so hard to imagine at some point this wiping out and maybe even coming down into this wick. So I think there's a reason to be kind of cautious here in this grinding uptrend, and certainly be looking for something like this as an opportunity for buying. And so my plan here is I'm going to go over some of the local longs that I'm interested in. But my plan here is to be cautious about signs of weakness. If we start breaking down, flipping this level, even though I'm going to probably be looking to take long triggers in here because we have not broken down this structure, I'm going to be playing everything pretty close, and that's what I have been. So for example, I took 2 longs yesterday, but I took profits on both of them. I took this long on the flip. I took profits. I added back. I took profits at the highs of the range. I'm not going to long into the highs here. We might get this today, and this would be interesting. This will be kind of our first local test, come and take these lows. Let's go on the 15-minute here. And I might be looking to add back. I have a hedge short up here. I might be looking to add back to longs here with a local invalidation if we get a clean reaction. Again, just targeting a new high, because why not? That's what price has been doing, target the new high. But if we start breaking down some of these structures, I'm just going to hold my short. I'm interested in looking at this level. These are the local levels. And this would just be a continuation of the pattern that we've been seeing Bitcoin in, which is ranging, impulsing, wiping out liquidity, ranging, impulsing, wiping out liquidity, but still higher low, higher low, higher low, wiping out liquidity. And even my idea up here, I shared that I was, getting kind of wary of this for long risk. That's why I took the hedge short, was just to come down and make a higher low, wipe out this impulse, maybe a little bit more ranging. And so why not trade around that idea? But I think the idea would be to be pretty cautious if price starts breaking down that pattern, starts flipping some of these levels. And I do have plans to take longs around some of these lows if they're taken and reclaimed. Taken, reclaimed, some signs of strength. If this happened, I would take that long. I would cut it immediately if price starts breaking down. And we have to suspect, does it make sense to everybody that how you could be bullish? And I think I lean bullish, but still wary and want to be looking at the charts with a different perspective, which is we're developing a lot of liquidity under these lows. And at some point, Bitcoin probably is going to wipe out. Now, I'm not even saying this liquidity. How it could happen is this happens and it wipes it out like this, right? But at some point, Bitcoin likes to just flush out all the series of higher low, higher low, higher low, higher low. So we have to watch, I think, carefully as Bitcoin comes in to test some of these lows for just all of them to give way. In which case, this is a major idea, taking 1, 2, 3, 4 lows where you would expect to see a big reaction. And I'm going to be prepared to trade that level if we get it. And the other one would be price running into this uptrend and retesting this wick. These are the levels where if price comes down here, there's probably a nice opportunity to get into a long where price is likely to react with easy invalidation, but the trade would come very quickly. Price would probably move into the level quickly and move away from the level quickly. Let's just go in here and delete the brushes this way. I'll look at chat in a second. I haven't even looked at it. And so my plan, just to kind of cap all the context here, is yes, I took this long yesterday right at the sweep of this wick, and I'm gonna keep longing into bullish absorption and local support. I'm just gonna take some profits off the position. I'm gonna actually just show you guys something really quick. All right. So here, this was in the Discord yesterday. I did do a pretty cool series where I scalped the 1 minute chart for hours, updating all the context and all of the. I think it was pretty cool. But anyways, here I'm saying back to regular scheduled programming and off the 1 minute chart. Levels I'm watching on a higher time frame for continuation. And the reason I'm going to share this is because I'm going to be trading every level I'm interested in this exact same way. And that might even happen during this live stream. Retest a POC, taking series of higher lows on the 1 hour. If we lose POC, lows into our GP, but we'll need to consider PC resistance for profit taking. Sweeping that wick. Those are all 3 levels I'm watching on this medium time frame. So this was the idea. Price comes down into the POC, takes these 1 hour lows here, and impulses to the upside. That's the long I'm interested in. Price is approaching, immediate level of interest approaching. I have other levels I'm interested in. If this level reacts, then I'm going to long it. Price is coming down into the level, no trigger yet. So price is breaking through the level, but that's what I'm looking for, is a liquidity grab under all these lows. And when price comes in, I mark it into the order here. I market it in. We have nice liquidity wiped out at the lows. And I say I want to see price moving off these levels quickly. Otherwise, I'm typing quickly, so here's a spelling error I didn't even notice. Otherwise, a grinding downtrend. Need some strength and follow through. Want to see SR flips, more signs of strength. It's just something I talk about every day. We want to see price claiming levels. But I have this GP marked out. I'm looking for a TP1 off this position. And I pull 2R off the position. I'm taking profits. My target's the range high, but I'm taking profits. I'm removing the risk because I'm longing locally into the highs here. I mean, into all-time highs. Pull 2R off, letting the rest run. If I get a chance, I might add back. So price is grinding down. We get the rejection from where I TP'd. I'm identifying structure. And as price starts breaking bearish structure, adding back anywhere in here makes sense. I can add back locally on the 5-minute chart for a lower high, or higher low rather. As price comes down into this level, we just hold it up, right? So I'm treating a lot of the way I'm managing these positions. For every dollar I risk, I can make $8 off this long. If I compound it and take profits compound it, it's actually a little bit more. But I can add back, managing my risk locally, taking profits, and I can keep building this position, but all with profit taking, removing the risk, profit taking, removing the risk, profit taking, so on. And so when I talk about my levels of interest, and it might seem like, oh, it just sounds like you're gonna long every level to the downside. I'm gonna long specific areas of the chart with specific invalidation, but I use market entries, right? So I'm looking for, this was earlier, just saying that I'm hedging short here. As I kind of thought about the context here, I'd rather just have this short running against my longs and potential new long entries that may not work, because my primary strategy here is going to be longing the dip at key technical levels if I get a nice clean reaction. So that's the context here. If we apply these same ideas, this was the long that I took. If price is, we'll go to the 5-minute chart here, or even the 1-minute chart. I understand why I want to long this level. I want to see all this liquidity wiped out. I'll take that long. Doesn't matter if I'm bullish or bearish. Highly reactive level. I have invalidation. As price grinds up, I'm taking profits, but I'm adding back here because more bullish absorption and order flow. All the risk is removed. I have profits taken. I have all my stops moved up, and I have a hedge short. So I'm playing this carefully. I'm interested in longing this level for the same reasons. It's local. It might come in 10 minutes. Who knows? It's all local liquidity. If there's signs of tons of liquidity here, we hold up the level. I'm going to enter. I'm going to have local invalidation. And if we start breaking down, I'm just going to cut the position. If we get continuation, I'm going to pull some profits off the position. And again, letting the rest run. That's my plan. Looking at local time frames, local structures. If we just rip through this level, I'm not going to long it. And the same is going to be applied down here. We have a high volume area. If we wick into this level and we have a reaction, I'm going to long it. I'm going to be willing to take profits at any signs of weakness into something like an SR flip here. Take some profits, remove the risk. If it carries, great. If not, I'm going to do the same thing here. Take some profits. And what can happen, and may even happen in this case, is I long in profits, I long in profits, I long in profits, I long in profits. And even as price potentially goes lower and lower and lower, I actually just get nice longs with profits locked in off every key level, but remove the risk. And you end up longing a downtrend profitably, right? And price could start trending down. I have a hedge short running here. In the case that price just, there also is the case that I take a long, don't have any opportunity to remove the risk, get stopped out, take a long, don't have any opportunity to remove the risk, and price just breaks through all these levels quickly. But anyways, the way I like to manage my positions and risk is trade around key levels with invalidation. I can always find a new position with the style of trading that I have and the approach I take to the market. I do not care if I had some longs from here, I took some profits, I took a short here, I got stopped out. I don't even care if I have zero exposure to Bitcoin here. I'm not going to randomly just start opening longs anywhere. I can identify key local ideas, put on my risk, put some size into that with tight invalidation, and long into this structure, and just cut it if it's not working. We have to be really wary, I think, about the some of the dynamics. I've been looking at the BlackRock order flow and maybe forming the ETF order flow, forming some theories about it. But some of the dynamics between that liquidity and how it operates around market opens, market closes, and weekends, because we have this idea of there has just been aggressive market selling all in this uptrend. People selling into this rally on the BlackRock ETF, but limit buyers coming in and absorbing everything. Bigger traders, right? Institutional money. But the liquidity generated by the FOMO of the markets opening higher, and then we see aggressive buying coming in at the highs, and then big retracements. I'm starting to think that that's going to be a major driving factor in liquidity for Bitcoin, is because there's a pretty big arbitrage opportunity there between the market closes and opens. All right, let me just, I'm going to read backwards through some of the chat. Somebody says, I was lucky enough, no pun intended, to take part in your scalping exercise yesterday. It was great to witness your thought process. It was extremely educational, and I learned a lot. Yeah, and just for some context, so basically what happened is there's going to be a lot of members in here in the Discord that haven't gone through all the educational materials. I give updates. All my live market updates are showing examples of some of the stuff in the educational materials. And so I said, hey, here's an example of a scalp short I took, which we had basically a $10 million long open here. We have this local range. This could be a scalp long, scalp short, just scalping on the low time frames. And then it got stopped out, and somebody there, he meant no ill will. I didn't think he thought I'm an idiot or anything, but it didn't work. And he was like, why would you take that? We're in a strong uptrend. Don't you think 75K is possible? And so I wanted to demonstrate. I said, you know what? I'm going to get into the low time frames here, and we're going to scalp all of this. I'm going to just show, if I'm scalping, I might take 15, 20, 30 trades in some cases on these low time frames and demonstrate exactly the concepts. It's not about whether one trade works or loses. And so then we proceeded to scalp into this. I took a short on this rejection. I took a long, cut it with no follow through, holding my short because my target for my short was into these lows. I'm not going to explain the concept there, but I explained it in the scalping series. I longed here, took profits, longed again, held my long through this, took profits right here. All these levels marked out, longing within 0.05% of the lows, taking profits within 0.03% of the highs. Price came in here. I longed again, noticing signs of weakness, cut the long, held the short, and then long this level. Again, scalping these low time frames, 0.5, 0.8% moves, but all looking at the same structural ideas that I would trade on a higher time frame. Longing this, pointing out this SR flip idea, which price actually did run straight into, and then straight into backtest. And so this is scalping the 1 minute time frame. You're not really taking longs or shorts based on what you think price is going to do. It's just you're trading structure. If structure holds, I was maybe going to add to my short here. I decided not to. I just held this short. But anyways, it's cool. You can I marked out all these levels before, and price just came and interacted with every single level perfectly, giving some really nice setups. Then price ran into a more important level, which is this, and that's where we went back to regularly scheduled programming. And we can even maybe look at some of the low time frames for a few minutes here, but I'm going to read some charts. So I think it was essentially a masterclass in scalping low time frame structure. I'm not saying that, I take losing trades and all that, but pretty much every level within 0.05% was getting perfectly interacted with for nice scalps, nice ideas for strength and weakness and all those things. There's a lot more structure in here, but people would be surprised how reliable some of this low time frame structure is, depending on how you analyze the market, where you develop ranges. This is something you'll see all the time. 1 minute time frame, range highs, range low swept, range retested, signs of strength as price breaks out of these local highs. This is a POC up here. But anyways, can actually trade around that, but you have to trade it on the time frame that you're trading. All right, I'm going to just run through the comments really quickly. I'm not going to answer every question, but we'll just see what's going on. Spam UT. Someone wants a USDT dominance chart. Spam USDT dominance chart. Someone's saying stop spanning. Someone's saying go to bed. Can you check? Okay, chart. The last comment, any shorting opportunity? Well, obviously, even longs have to be planned carefully in this uptrend. People will say, oh, it's been up only, but it's been up only-ish. There's been pretty big retracements. Sorry, something caught my throat. And people trying to trade this are going to have round-tripped breakout trades and been getting chopped up pretty badly in here. I've been fortunate to find some of these nice long entries and take profits. Longing into these rallies, taking profits. Longing into them, taking profits. But I think for a lot of traders, this has been kind of tough price action. And there's been short opportunities. I haven't taken actually that many shorts in this price action. I did catch a short here. I covered half of it pretty quickly. I didn't short this. We basically spent like 15 seconds up here and came straight down. I just took profits on longs. I did hedge short here, and I'm hedge short here. So are these opportunities to short? Yeah, I mean, we have structure that we can trade around here. But an opportunity. So this is something I've been trying to do more in the Discord, which is I like trading around some of these like liquidation events with market entries, and that might be whether that's a local setup, retesting support, or even these higher time frame ideas, which requires some attentiveness to price. And so I might say, price is approaching these wick lows. If we sweep and reclaim, I'm going to market long. I market it long, maybe share some of the order flow, looking for some of these levels to be reclaimed, that sort of thing. But for most people, that's kind of a challenging, if you're not full-time on the charts, those can be challenging trades to take. And so a conversation was happening yesterday in the Discord. It was essentially around this idea. Too many people are waiting for perfect entries, and then they miss the entire move because either they missed their entry, price didn't hit their exact level, and then they get left sidelined waiting for a deeper retracement. But sometimes it can not make sense to wait for a deeper retracement if the level you're interested in was already tapped or a lot of the liquidity was already grabbed. And so you have to look for new setups. And that happened to me here. I was actually looking for lower on this wick into these lows, but then I noticed order flow, all this volume, all this liquidity grabbed, and I said, I'm just shifting my perspective here. Yeah, I'd like to long down here, but I'm actually just going to long the retest of this and target all-time highs. And even as price ranged and chopped around here, I added to my long in here, which ended up holding up. So I took 2 longs. I'm not waiting necessarily for new lows and down here, although I'd be interested in it. I can structure some trades around these local levels, still have great risk reward. And so what I would like to remind people of is that a trade is not perfect in the sense of you long the absolute bottom. Like a perfect long is 15K that you held till now. A trade is good because of its structure. And even a losing trade can be a perfect trade. This is a short opportunity in the sense that it has great risk reward and easy invalidation. This is a great long opportunity because it has great risk reward. It's a reasonable idea and nice, easy invalidation. But it's taken at 72K. It's not taken at 15K. But it's perfect because of its structure. And its structure is high risk reward set up with easy invalidation. You just have to use risk management. Adding to longs here is a perfect entry. It's the absolute bottom of this move into these, but if it's structured into these highs, it's not a perfect entry if you're trying to turn this into a trade targeting 200K and price comes down and stops you out, right? So you can structure a trade anywhere. This might be a perfect short if you cut it here or price comes down here. It's not a perfect short if you just want to sit in a short, never do anything with it, not manage your risk, and price goes to 200K. So it's just important to understand that a perfect trade or an opportunity is only as good as the structure of the trade, which includes invalidation targets and your ability to take profits off the trade. But yeah, so I'm short. But for example, I shorted here and price came up and I got stopped out of that short. So I still thought it was a nice opportunity to get short on this reaction. But the context of that even is I longed up into here, took profits, I hedge shorted down into here, I scalp longed into this, and then I took a 1 hour stop. And I sized it very small. My sizing was to lose 1 R into these highs. And then I just carried on, took some longs, took some profits. So the problem is with sharing an analysis is to people who don't understand any of these technical ideas is this is an amazing trade for me. Longing on this reclaim, taking profits up here. But people will come back. Let's just say price is trading at 50K 3 weeks from now. They'll come back and say, you were bullish. I remember you were longing 72,000. Now price is at $50,000. But I remember here, and they'll share a post, a chart saying, look, you longed $72,000. Yeah, but I took profits off the long, and these were winning trades. I can just trade, but because I'm structuring the trade locally. So, yeah, I don't know. But people want you to essentially say, is this going to be the lowest price Bitcoin ever goes again? Because everybody wants every trade to be, every long to be the lowest price Bitcoin ever goes again, and they hold it to $1 million, and every short to be the highest price Bitcoin ever goes, and you hold it to $0. But that's not really a realistic perspective on the market. I'm going to add one more note here. I update all the things I'm doing in the Discord, and I teach all these concepts. But if you aren't a trader, there is no such thing as a short opportunity because you don't know what you're doing. You're just going to get wrecked. If you have to ask somebody, which is why I put so much work into explaining all these concepts in the Discord, so people can see them repeated, and start developing those skills and that foundation to manage their positions and manage their risk. But if you have to ask somebody, is there a short opportunity? And you don't know how to manage your entries, your invalidation, your targets in any way, and you're relying on somebody to come and tell you what to do with your trades, how are you going to operate in this market? It's just not realistic. I even encourage people in the Discord. I have a lot of high time frame ideas that I'm interested in. I update those charts. But if you're waiting for me when price is coming into a key level on Bitcoin, Ethereum, and 3 other alts, and price is liquidating down, tapping a key level, to update 5 or 6 charts for you when price moves down in a minute and up in a minute 10%, and taps all these key levels, I say set alerts on levels you're interested in trading. Don't wait for me to update 5 charts and type in the Discord, I entered this, before you make a decision on the trades you want to take. There's certain trades that you can get into that are a little slower, that, having some context of an update maybe could be used as an idea. But some of these really quick liquidation wicks, these are just trades you'll never get into if they're tapping a key level, if you're waiting for somebody to type you an update. So the reason I do these updates isn't to be copy traded, is to explain the concepts. And if you're in the Discord, you'll know that I go through great lengths to explain the actual concepts of why I'm entering and what I'm looking to see. And it's all the same thing over and over and over and over again on every time frame. And so people can start developing that confidence to just, do some paper trading, trade with maybe a dollar of risk. It doesn't matter. Just repetition, and start getting confident with your risk management, your execution, and so on. I mean, I shared a bunch of swing setups on Twitter on alts, 50, 60, 70, 80% lower. And it was at support, and price for some of those altcoins moved very quickly into those levels and moved away from them very quickly. But they were perfect levels in some sense, and the bottoms of some of these moves. But how many people do you think had the actual skill set and confidence to execute those trades? Probably very few, because it never looks very appealing to long some of those levels at support. But yeah, I'm kind of interested. I don't know if I'll do a super long live stream today. Bitcoin's starting to form a little bit of bearish local structure here, grinding down. That can break easily. And I might even trim half of my Hedge short with the same idea as I'm trading with my longs, which is maybe just keep the context locally bullish here. Yes, this could be nice. Take some profits off of it, remove the risk, and maybe add back to my longs. And just start doing that, building short positions in profits, long positions in profits. This could get stopped out too, and then my longs just carry and wait for the market to move whichever direction it's going to move. But just trading around key levels, key ideas. Okay, so I'm going to read a comment here. Again, this isn't an indictment of you, but someone says, can you please analyze the cake chart? I'm stuck in a long. Want to know what you think about it. Thanks a lot. I mean, it's just, so I always say there's just no reason to ever get stuck in a trade if you're structuring them properly. And this is going to be revealing of how I approach trading. I can look at the chart. I have no idea what it's going to do. I don't take trades because I think they'll work. I don't take trades because I think I know what the market's going to do. I don't hold trades that aren't working because I hope they'll come back. I just structure my trades. This is a trigger. It's based off of analyzing the market for thousands and thousands of hours, day after day after day, year after year after year, where I know I can take this long and I should cut it if it breaks down. I don't know if it's going to go up or down. I know I have a reaction. I know there's a lot of liquidity being tapped here, and it's a nice technical idea structured this way. Now, if this started happening and somebody said, hey, I'm in that long, I didn't cut it, I'm stuck in it, how do I get out of it? I don't know. Close it? If you're just hoping price goes up, and so if your goal is to get out of a trade and never take a loss, you're just better off taking a loss that is managed and calculated beforehand. You know exactly what you're willing to lose on the trade. So we'll look at the chart. I'm kind of interested, FET coming up to some local resistance. I'm interested in a FET long as well, but we're going to replace this FET chart. And FET shorts. I have a lot of alerts here. We'll replace it with the cake chart. I haven't looked at it. But anyways, I'm interested in this long, and I'm interested in a short at the range highs. Something like this. Sweep, reclaim. Going to long it up into the highs. It's about 30-some% away. I'm going to short up here. And cut it if we break out. All right. Okay. Well, let's look at the cake chart here. My assumption is if you're stuck in a long right now on cake, you longed the top of this impulse because cake is just going straight up. And for you to already be concerned and be stuck in a trade, you longed a breakout and you longed up here at this wick. Because, I mean, price is down 5%, right? So you're stuck in this, or it's down about 8%. So you're stuck in this trade. What was the thesis of this trade? Let's just start breaking down the logic here. Probably the thesis was maybe a little bit of FOMO. You just saw price going straight up, and you thought, hey, maybe it will go to $100, but you didn't maybe have any structure and validation for this trade. Breakout longs are something you can do, but you have to size them appropriately and manage your risk. I can identify levels of support and levels of interest. I mean, we're basically basing and building a range here. And if I was to have been trading cake on this 15-minute structure, I probably would have looked to take this long. This would be kind of a classic local idea, which is form a range, come sweep the range and retest the lows. You have nice tight invalidation, probably 0.5% of a stop. You're already trading into a 5-hour trade. Wait for that structure to form, and everybody in the Discord will know with a certainty, because I talk about it every day. If I was watching cake here, I would have said, this is a long setup I'm interested in, taking these lows, reclaiming. This here, I would have said this is key resistance. This is an SR flip locally, key resistance, and I would have structured my trades around this, and I would have had an opportunity. If I wanted to trade cake and I was looking at the chart, this is the exact trade I would have taken. This is exactly how I would have managed my risk and cut the position. And that's patience, that's discipline, and that's having a plan. You're in a position where you didn't have a plan and you long the top, and now you're underwater and you're trying to figure out how to get out of the trade. Well, you need price to claim this level. You need price to claim this level and get you out from being underwater. Whether that happens or not, we don't know. But we have a range building, signs of strength, bouncing. Price could claim this level, could break it down. But why not get yourself into some positions more like this with invalidation rather than just FOMOing into a move without a plan? That's why I literally have 20 charts right now with structures on mini time frames, marked out, set with alerts. I have no idea if those levels will ever come or get hit. If I get an alert, I'll go check the chart. If I get a trigger, I'll take the trade. And I'm planning some of my trades days, weeks, hours, months ahead of time, identifying the levels I want to trade, not just randomly looking at a chart and longing because it's going up with no plan of it going down. That's probably not the answer you want to hear, but the truth is I have zero idea what price is going to do. And if I took this long on cake, I'd have zero idea if it was going to work or not. I would just take it based on structure and invalidate it based on structure and take profits based on structure. So how can I just want to be careful about anything that sounds like advice, which is I can't say, oh yeah, well, you know, we're a strong base here and price looks like it's going to break this resistance. I think you'll easily get out. Where's your entry? I have no idea. If this reclaims, that's a sign of strength. Breaking down, sign of weakness. Resistance here. If this reclaims, sign of strength. And then you have to hope for an impulse. I don't know where your entry is, but at the same time, you know, maybe you get out at break even. There are signs of strength. Or you have the opportunity and maybe you just make the decision to hold it and then this happens. So I don't know. It's really hard to advise people on how to manage a position that you didn't take. You don't even know what their idea is, where they entered, and how much risk is in the position. I hope that makes sense. And these structures obviously playing out every day on every chart, on every time frame. And the whole idea of risk management and structure is you risk $1 here, and by dollar, it's just relative to your account. For every dollar you risk, maybe you make $4. You risk $1 to make $4. You risk $1 to make $12. You don't risk everything to make some undefined amount of money. And if this happens, you're liquidated or you lose 20% of your capital. If you have a $10,000 account, you might risk $100 on this trade to make $400. If you have a $100,000 account, you might risk $1,000 to make $4,000. Risk 1% to make 4%. And you just take lots of well-structured, well-planned trades, and that's technical trading. Someone's saying, I imagine most of your entries at 1 minute chart. Do you prefer entering at a candle close or when it's forming? No. I mean, it depends. Well, it depends on the setup, right? If it's just a liquidity sweep, you want those reactions to come very quickly. Like if you're shorting, I mean, tons of volume, tons of delta up here. If you're waiting for the 15-minute close, it's not that that's not a valid way to trade this per se, or it's not a valid way to trade the 15-minute close here. But I have no problem if I see 100 million volume come in as a low gets flushed and price start wicking back up, taking that entry and looking for immediate continuation. So something like this, price to just suck back up. And if I don't get it and price starts coming back down, I'll just close it, and then I can wait for some structure to form. That doesn't always get me in to that doesn't always work, right? So for example, I was long up into this, took profits on this rejection, and I was on a live stream, and I actually took a long in here, and I cut it pretty close to my entry because at the time price wasn't coming back up quick enough, and I didn't want to get caught in one of these. So I just cut it and said I'm going to wait for some structure to form and a retest of the level, and we never got one. And that was on a Friday, right? So I'm also looking to head into the weekend. And but anyways, I took a long. I waited for the weekend. I don't trade the weekends typically. Waited for this, and my plan was to long after these weekend lows were taken and just gone to long that way. But anyways, I have no problem. But I also know how to execute and manage my trades. I have no problem and manage my risk. So if this happens, same as this, might take that long. If I'm getting the follow through, I'll hold it. If I'm not, I'll just cut it. Not technically. Somebody's saying if you have a range and price wicks through it, does the wick become the new top of the range? If you have a well-defined range, another technical kind of entry, not on the wick, would be a retest. So I know there's an example here because I traded this. So we have a range. Just going to low time frames. We have this big wick and insta reaction, right? Like price wicks through and comes straight back down through the level. And then we take the lows on high volume. We reclaim it. This is the range low. This is the liquidity grab the deviation, the retest. And so you actually want to look for that retest as a potential idea as well. We come into the middle of the range. So the range clearly defined. High, low, liquidity grab, liquidity grab. This no retest, this retest. Middle of the range is here. That would be a profit taking target, trading a range, middle of the range, highs of the range. But if you start pulling some of these levels, actually then this isn't the middle of the range anymore, right? So this is your range, retest, deviation. And what I would consider significant in this case is actually, and potentially bearish, is actually this level breaking. Not so much this level. So where I would start looking for more bearish outcomes is if we had the initial retest there, but if this level starts to break down, you're breaking down the range. This is a breakdown. And if I go to my live updates here, this is where I said, hey, this is bearish. This is a breakdown. I'd be interested in longs if we get signs of strength, but I'm not going to long into this. I'm not longing into this wick. I'm not longing this as a sweep and a reclaim. If we start seeing signs of strength, I'll long up higher. But for now, this is just a breakdown. And this is bearish. This is bearish, expecting lower and preparing for this impulse low, which I showed that on Twitter. But there's a bit of an if this, then that thing. Okay, this is a breakdown. This is a reclaim. This can be a long. You should probably look to take profits at the middle of the range. You should probably be wary if the range is breaking down, if you're trading a range. But anyways, let's go to the charts here. Again, probably this is some more bearish. I just want to point out on cake too. I have no idea where your entry is, but you know, I'm going to remove this chart. This is just an SR flip. And here's the problem. Nothing I can tell you is going to help you, because if I say this is resistance and you close this at whatever the loss is, I have no idea what the trade you're in is. And then price goes straight up, you're going to think you made the wrong decision. If you hold because there's support here and you're just hoping it's going to hold, and then this happens, there's no decision, or there's many decisions you're going to feel really bad about because you just don't have a plan. So, and you took the trade without a plan, and I can't make a new plan for you without knowing anything about what you're doing. I do want to pull back up the FET chart here. That might be something I'm trading today, but and I just need to be prepared. Still, the long trigger's a long ways away, but price is coming up to resistance. FET's just been chopping into a downtrend with maybe some ideas of even trapping some liquidity here. But with Bitcoin coming into support, there's always the chance of a big rejection and a quick move to the downside. We can look at XRP quickly. I actually need to go to this other XRP chart. So I had a long idea on XRP. Again, this would be sharing the an example of, this was just in the Discord yesterday. Let's just say you wanted to long this retest and you missed it. Because something that I've got some messages about, and I've seen conversations in the Discord, is people miss their trade, so to speak. And so they see price going up, and maybe you want to long this retest into this level and you missed it, and now price is up here. Well, you could look at this as an SR flip, and you might not be able to structure your trade with a 0.5% stop and keep your risk intact, but that trade's on the chart. You could put a little bit of risk on, get some exposure, but here we are just sweeping structure forming a range. I mean, this is, you got to be pretty cautious here about, like, I wouldn't never long into this. I'm sure lots of people did. Looks like a lot of volume up there. But again, it's just, that's longing into resistance. That's actually just a short trigger on this low time frame. If you're trading XRP, probably short into a retest there. I'd be actually quite interested in a tight invalidation long setup, taking these lows, and I am planning on taking that trade. Could even be a lot tighter, just depends where it comes in. But we can see price kind of forming a range here locally. If we break down, there's no structure. I mean, you got to look for something like this. Come and take this low. And that should make sense, right? If we start breaking down this local structure, what's price bouncing off of here? Can move really quickly to that area of the chart. And it's not to say that it's not a prediction. It's preparation for an opportunity. People get really upset on Twitter if I say I'm really interested in this long. I have an alert set here, and I've got it marked out on my chart, prepared to take it if I get it. So people say, you're such a perma bear. Why are you sharing all these bearish charts? It's not a bearish chart, you dummies. It's being prepared to long a key level. Being prepared to long a lower level isn't being a bear. It's being prepared to seize opportunities. And I got some alerts. I got some alerts set here on XRP. Doesn't mean there aren't long setups here. It just means it's okay to be prepared for long setups below. While everyone else is getting liquidated, you're long in the bottom because you're prepared. Same is going to be my plan on Bitcoin. People are going to be angry because I've been primarily bullish on Bitcoin and taking longs, but like I said, locking in profits. They're going to be angry to see I have a short from up here. But if price runs straight through all these levels. But it's not my fault that people, I mean, I literally update almost every single thing I do the moment I do it in the Discord and give deep explanations why. So I don't do that on Twitter. I try to update my general perspective. And that might be, hey, we got to be kind of wary if some of the structure starts breaking down. And definitely more focused on higher time frame levels. But this is I mean, every market is, but you know, crypto especially, it's a fast-moving, volatile market and requires plans and preparation. Somebody's saying, do you ever consider a GP as an SR once it gets flipped? Not, it can be, but more the structure around it. Like this, it wouldn't be so much that I consider this level the SR flip. I more consider the horizontals the SR flip here. A sign of weakness. And again, I'm in this short from here. This is the update I gave before the live stream. I'm hedging out my longs with a short at the top of the range. Might trim if we sweep these local lows because I've already talked about Bitcoin looks like it wants to break out. I'm not adding to longs up here. I'm going to wait to see this liquidity get tested. That's the level we're approaching, and I might take a long. Local bearish order flow forming up here. That's a nice local trigger. And then I said, can imagine scenarios where Bitcoin is trading much lower at the open of the markets. Don't want to get too bullish at range highs. Would rather just hedge out. BlackRock ETF also had some aggressive buying yesterday into the close. And essentially what we've been seeing is aggressive selling and people getting chopped up. Aggressive selling on BlackRock. The market is gapped up here. So I don't aggressive buying into the close. I mean, and we're trading much lower at the open, that's kind of an idea. It's not going to be a primary thesis for all my trades, but it's something I'm starting to think about more and more. How that liquidity is going to play on price. Again, very rounded, bearish structure into this move down. There'd be no reason to be longing anything in here. But we're about to see some key liquidity tapped. I do need to, something I always forget to do during a live stream is update the Discord. So I don't know exactly where my my soft stop's going to be on this. This is sort of an idea. If this idea is working, it should look something like this with an entry, and maybe we get a quick continuation, and I might just have to stop it out and cut it. May trim my short, but not going to trim it if price just rips straight through the level. This is a local low time frame level. This was significant because of this point of control region, but this was a local entry. These are local targets for longs. If you want to hold a long for a higher time frame target, you need to long higher time frame lows. First wick right off the 786. Come and sweep it. Sold with a pretty big breakout here. Just grinding impulse. But even here, you know, I'm not just gonna start opening more shorts and adding to my position because I think a big liquidation's coming. I'll take on some risk up at the range highs. But this looks pretty bearish until it doesn't. Again, just a grinding, rounded downtrend as price is driving towards liquidity. So this would be like if I was scalping the 1 minute time frame in this situation, I wouldn't be longing every single sweep of a wick here into this. I don't think that's an appropriate context for price. So that's where I definitely always advise, like even for people who are interested in scalping and they might watch or go follow me on the Discord when I'm doing that scalping series, is if you go practice your scalping with paper trading, take hundreds of scalps and really learn how to manage those positions, because you have to make decisions very quickly. Because where you don't want to get confused, and I said over and over again in that, is, and I nailed the context, I think pretty damn almost perfectly, of price, which is, it's not that when you're scalping that you are longing every, in my case white, but in most charts green candle, and shorting every red candle or counter trading. You're still identifying key structures. So just kind of refreshing that for someone saying Adam looks like it's broken out. I'll look at a couple charts here, but I do need to be prepared to make some decisions here on Bitcoin as we approach these lows, and I might just prioritize that here. Of course, if we do just liquidate and have a big rejection here, this short becomes a monster. Sometimes you end up in a hedge or a low time frame position, and then price just carries, and there's no reason to close it. But I'm kind of willing to close half of it here if I get a trigger. I was pointing that out to somebody the other day, that sometimes you end up in big trades when you're scalping by accident. And so like here, at the time, major high, we consolidated and we came and wicked through this local high, and we had some bearish absorption here. So I just threw on a scalp into the lows of the range, just saying, I'll just trade this local structure. I mean, that's a nice trigger. And then the bottom just dropped out, and there was no reason to close the trade, and I ended up getting a lot off of it, which was kind of awesome. You just end up in these crazy 20R trades accidentally, but you never want to assume with every scalp that that's going to be the case, because trying to turn every 1 minute or low time frame scalp into a swing trade doesn't end well in the long term. But you can give price a chance to have a bigger move. It is just funny. I don't know. I don't know what price is going to do, but I made a post on Twitter the other day that apparently this is time to start accumulating FIL, because it's broken. It's a 2-year breakout, and it's broken all resistance, and now's the time to start accumulating spot. Next target $200. And I just said, hey, I don't know if we're going to break out or not, but it's just funny that the stuff you see on Twitter is this is the perfect time to buy FIL. But I'm kind of waiting. I mean, I did take a FIL long here, but I wasn't expecting price to go straight up hundreds of percent, so I took some pretty significant profits. But this would be the time to start accumulating, right? This is major resistance, and this is a technical rejection with a perfect sweep. I may have a FIL short into a retest here, so that's just a technical rejection. This is support certainly, but I'd be a little bit more interested in accumulating into a big flush like here, taking a long into these lows. And just the kind of comments you get when you share ideas like that, again, it's just saying, if we get this, I'm going to long, and people will say, you really, LOL, LMAO, you think it's possible that FIL's going to have not going to break straight after 2 years of accumulation? It's up 400%, you dummy. 300%. You're not buying the breakout here. You're buying the breakout at the exact top, and FIL is a very inflated coin. So supply has increased so much since some of these highs. This isn't the right chart for some of the older price action. That FIL is at the equivalent of $80 right now because of how inflated the coin is. So it's actually up from those lows about 3,000%. But people don't understand some of the supply of the token and how that's changed over the last 2 years. Anyways, I just share my thoughts, and my thoughts are, of all the times to accumulate, this would probably not be the best. Take a trade, come and take some of these lows. That'd be kind of cool. Okay, wait. I was going to look at a chart, and I keep getting sidetracked. Oh, it was the Atom chart. I'm just curious to look at some of the charts where people say it looks like such and such is breaking out, and just kind of what that thesis looks like. Haven't looked at Adam in a while. Okay, what was the comment? I need to get over back to Bitcoin in a second. We look at, probably actually right now. I'm just updating the Discord with my plan. Was looking for those lows earlier today. I'm in the short. Make sure it's not confusing that I'm holding the short, but maybe adding back to the long. I want to see some nice liquidity coming to these lows. I'll probably let's look at order flow instead of so as you can imagine, I mean, I usually, people give me kudos sometimes because I'm usually pretty good at updating in the moment. Price is coming to the level, price is testing the level, but I also have to manage a short here. I have to open my own long. I have to make a decision. So, you know, some of these updates can lag 5 or 6 seconds. A little bit of selling coming into these lows, increase in open interest. So people looking to trade into a breakdown here, some risk coming in. One thing that Bitcoin does actually like to do is squeeze out people shorting to a breakdown. Not always, but it likes to sometimes punish some of these shorts coming into this move, squeeze them out, and then have to move down. Not always. All bearish grinding price action as of now. But I prefer to take my shorts, if I can, structure them up here. You have some bearish absorption forming locally, signs of resistance, shorting into for the move down. Give me a second. I'm gonna look at what was the Adam comment. Adam looks good at brokeout. Yeah, I don't know. I was just seeing if there's any other context here. So here we are on the daily chart on Adam. I'm assuming you're talking about this breakout. On the daily time frame, like pretty much every friggin' alt. 618 retracement was the exact low before the impulse to the upside. Same on Pepe for many thousands of percent. I mean, personally, a breakout trade would probably have to be structured something like that with a stop about 8% away. I personally wouldn't be that interested in longing this. I think even I would just be more interested in structuring. Like, we don't even really have, do we have grindy structure? You're just longing into all sorts of resistance here. Trading some of the local retracements towards a breakout with a little bit cleaner setups might be nice. But I definitely would just consider this local resistance in the context of a breakout. I wouldn't just long here hoping for a breakout. If I really wanted to trade this, I would be looking for just a cleaner setup. Do have a low ascending trend line here, but I'm kind of a little, one of the reasons I'm so wary about the market in general, especially altcoins. I mean, there's so much open interest. Everyone's expecting everything to go up another 20x from here. And like, if I post anything about a retracement on anything, it'd be 20, 30, 40%. Everyone is like, that's impossible, you idiot. We're in a bull market. There's not going to be any 30% retracements. And people are just longing into resistance. So, anyways. I would maybe be like, let me just do a quick setup. I have to get over to Bitcoin again. Coming into some of these levels could be the more interesting, filling some of these wicks for a swing position. Or if you want to structure a breakout trade, just trying to structure it a little bit more diligently. Just look at this as a range and maybe come and look for a long on the retest. Get something like this. You can still take profits up into the local highs, trim some of your risk, and let the rest run. It's probably how I'd approach this personally. Probably the 786 right at the range low. Could even structure this a little differently, which is waiting for even more signs of strength to come in, start reclaiming some of these lows. All right, back to Bitcoin. Probably going to see how this level interacts, and I'm not going to spend a ton of time here on the live stream. It's going to be a quick one. Still about 2 hours from the New York Open, so no major liquidity grabbed yet. Like, if we don't see a big, there's not a high probability even local level to bounce from if we can't see a big flush in volume here, delta. Could chop around these lows. We've taken a minor low. Oh, I'm not showing the price just grinding down. Likes to end in impulses. I would actually at this point be surprised if this long idea would work. I might be surprised if there's a trigger on it. We'll see though how much liquidity is there. As price could just go straight up from here, but we'll see. Okay. I understand. You're talking about this breakout. Not the horizontal one, but maybe this with the breakout retest. Or this breakout retest. Okay, yeah, exactly that. Well, that yeah, that's interesting. The only thing about that is that's, weeks ago or a month ago almost, and priced it up 50% from there. So, I mean, I think that's true. That was a breakout and a retest. It's just obviously can't trade that now. Um, Richard says, how often do you cut your trades before it gets stopped by itself? I think when I do that, I am losing EV, just expected value, because price action just fakes me out, never getting to my stop in the end. Well, I'd have a couple thoughts around that, and I might end the live stream after answering this if we're not taking these lows immediately, which is I do it all the time, and I use a soft stop often. And the idea of a soft stop is, like, let's just say I have a position. I'm not going to go through all this from an educational perspective, but I'll answer it the best I can quickly. Is I might be sized. Let's just say I wanted to size it like this. So this was my trade. It's like a 2R trade into a breakout, something like this. Well, I might be sized like this, and I take the long, and I'm not going to lose 1% if I close the trade here. I might lose 0.9, or sorry, 0.1, 0.2 R, and I just soft stop it. So this would be an example of some of these wider setups. I might trade wider size for a deeper stop loss, but soft stop it at a 1/10 or 1/5 of a normal stop. And if I do that, I'm open to just getting back into the trade at a sign of strength. But if this is happening, then I'm just out of the trade with 0.2 R, and price broke down the level and we got continuation, and I'm out of the trade. And so that's how I would use a soft stop. But it's not, like you said, price fakes you out and then you're out of the trade. It just depends on the context. You should probably, if you're trading around structures, be open to the idea of getting back into the trade if the level's reclaimed. And your soft stop should be a partial in that case. So someone says, hey man, I closed my dot long this morning. I wonder if you think I made the right decision. Made 3K profit risking 1K. Well, I don't know anything about your trade. We can look at dot maybe quickly here. Did you make the right decision? I don't know. I don't know where you entered. I don't know your size. I don't know anything like that. I mean, if you longed here and you took profit up here, that's pretty slick. If you risk 1K down here, man, this is the exact same chart as literally so many alts. This is the exact same structure. But if you long down here and took profits, still great. But I mean, you could maybe leave some risk running on that trade. Price just grinding up, rounded grinding structure into an impulse. We have a reaction at a high here, but entered at 11.11 and closed at 11.70. Okay, so yeah, I mean, I think you made probably a wise decision there, because it sounds like you entered into the breakout. Entered 11.11. Yeah. Yeah, I can't go wrong with that. You found your long down here, risking 1,000. It's probably your exact setup. and you got about 3R out of it. Maybe you had your stop under this low. Price was impulsing. You saw maybe some signs of weakness. Price breaking down this structure, and you took some profits. Price is now quite a bit below your close. So if you wanted to get back in, you could always add back to your position on a new setup. Be hard to call it the wrong decision. Nicholas says, that's the thing though, I didn't wait to see weakness. Well, okay, so maybe you just closed on the impulse. I don't know. I mean, yeah, that if you're in that long and this is the 1 minute chart and you just kind of randomly close here, it's a little bit of an aggressive close on an impulse. I mean, you don't even have one 1 minute candle rejecting, but well, I might wrap up the live stream. I wanted to give some higher time frame perspectives. So let's wrap it up with this. I have local levels I'm interested in trading if I get clean triggers. I have a short to hedge out some of this bullishness, but I'm starting to be pretty cautious. You know, price having big impulses, big liquidations, medium impulses, medium liquidations, price condensing here. There's a lot of bullish ideas here. Shouldn't be surprising, but we have just piled up the liquidity below us under these wicks. And so I have 3 levels below me that I'm interested in seeing how price interacts with. The most local, a little lower, hopefully can fade some longs that just don't give clean triggers. And then I have some higher time frame levels into this wick. That's just got to be a long trigger on a reaction and tons of delta. If we just rip through it, probably just start to look to take all these lows into this level. And I can just turn on the local folder. I have local levels. And some higher time frame ideas I'm watching. Okay. FET rejecting again from the POC here. It's all the same, front run a bit, but all the same concepts on every chart, on every time frame that I think are reliable, not for predicting where price will go, where price will bounce, but for structuring trades. Where you know you have a trigger to get in or a trigger to get out, whether that's with a stop loss or in profits. Yeah, it could be someone just saying they false breakout 700, liquidate shorts, then aggressively break down to 600s. Yeah, I mean, of course you're never surprised to see this with Bitcoin, right? On any time frame too, like this. One more run on liquidity into the New York Open, and then just a big rejection. I mean, that's sort of Bitcoin's one of Bitcoin's favorite games to play. And it wouldn't be the first time, and I'd probably be taking that short trigger on a big, huge volume swing of that level and rejection. And that's a clean short trigger. It's just nice structure. Some will work, some won't. All right, peace out. If you guys want to learn more about this stuff, oh yeah, there was a question. Somebody was asking, what concepts would you advise to focus on if you want to develop his swing trade style? I found the best of my trades are getting at a key level and holding positions for days or weeks. Yeah, well, I mean, concepts that I think are important just generally. I'm not even saying you have to use the style of analysis that I'm demonstrating here, but is the time frame of your trade. Like, let's go to the daily chart here. Can make some sense if you're trading this as a liquidity grab on the daily time frame to have some higher time frame targets off of that structured long. It makes a little less sense to be trading the 5-minute chart and structuring every 5-minute structured trade as a swing trade, right? So mark out high time frame structures or ideas, and if you don't use price structure and you use some other concept for your trades, whatever the higher time frame versions of that are, focus on those levels and be patient. So I'd be willing to turn some of these trades, for example. If I got this, we come and wipe out all these wicks, and I might get a bit of a cleaner entry there, but let's just have an example. If I got this, I probably wouldn't start taking profits off this trade on the 5-minute chart up here like I might on a trade taken on a 5-minute, 15-minute time frame up here. This I might be willing to let run a lot further because the time frame of this is just completely different than me maybe longing a sweep of these local lows. So time frame. But yeah, I think the LATF is a great place to learn this stuff if you can keep up. We got lots of updates in there, lots of educational material. But there's lots of ways to trade, structure trades, to participate in the market. The most important thing is that you develop those skills before you start putting your money at risk, because the market's going to eat you alive otherwise. All right.